Well, good morning, everyone. It's November 26th. It's a Tuesday, and the S&Ps made new highs yesterday on low volume. Let's see what's in store for the market today. Calendar. Again, Thursday we have Thanksgiving. It's a very muted week. I'm not expecting a lot of data. Tomorrow we have GDP jobless claim, which is usually a report we would see on a Thursday or a Friday, but we're going to see it tomorrow because it's a broken week. Whenever you have a broken week, whenever you have a holiday week, you will always see a subdued market. Hedge fund managers tend to stay on the sidelines during holiday weeks. Whenever the week is fragmented, whether you have a Monday off, whether you have a Friday off, whether you have a half day, whenever there's any type of a holiday, it fragments the heck out of the market. So you're not seeing the true picture. Now, let me show you something really interesting and possibly eye-opening. This is the S&P 500. It made all-time highs yesterday on low volume, which is very positive. It's doing this because there's speculation that China and U.S. will finally resolve the trade war. I'm not seeing it, but the market is, and that's a lot more important than what I'm seeing. Remember, what we think, it doesn't really matter. It's what the market thinks. I'm just giving you my 5 cents because based on the fundamentals, but technically, low volatility, market making you high, it's definitely trying to price in a possible resolution or potential resolution of the trade war. Now, as soon as we made all-time highs, the market came off. It was overbought right here. The market pulled off for a few days. We went into slightly overbought levels from grossly overbought levels. And then right away, as soon as we made all-time highs, we jumped back into overbought territory. Folks, the market is stretched out. I don't care what you're looking at. I don't care what indicator you're looking at. This market does not have explosive upside left. It may continue to trend like this for maybe a few more days or maybe a week, but eventually something will catch up to it. It's extremely vulnerable. Volume is very low right now, which means most institutional traders are just sitting on the sidelines, and we will see a pullback to the 50-day moving average and more than likely into the twilight zone between the 50 and the 200-day line. Now, let me show you something eye-opening. Aside from the fact that we're grossly overbought. Notice the price is making higher highs, right? Look at the percentage of stocks trading above the 200-day moving average. It's not. It's in the same area that it's been while the market has been going higher. So the market is going higher, okay? The market is going higher, but the number of stocks driving the market higher is not. We actually peaked out right here at 75.21, 75.21. That's percentage of stocks in the S&P trading above the 200-day moving average. 75.40-ish, 75.21. That's the peak. We're now at 74.79. So we have slightly less stocks driving the market higher, and we're right now at a grossly overbought level. According to the market itself, overbought. And when we're overbought, we may get moves like this, but you're not going to get moves like this. You want to see a move like this. You want to see a move from 300 to 313, 330. You don't want to see a move from 311 to 313. That's not going to get you very far, especially when the number of stocks making those highs is decreasing. Now, let me show you something eye-opening. This is 5 years, okay? I'm just expanding it to 5 years. What happens every time the percentage of stocks in the S&P gets up here? What happens? We cool off. Look at this. 81%, 78%, 80%. So we're not there quite, but it doesn't look like it wants to go much higher. And if it does, it'll probably go up by about 3 or 4 stocks. Literally, it'll take 3 or 4 stocks to drive it up here, and then the market will cool off. What I'm trying to say is anytime we get into the 75th, 80th percentile on the percentage of stocks trading above the 200-day moving average, the market tends to cool off, and that's where we're at, especially when less stocks are driving this. Less stocks are driving this in the S&P. So the engine is working harder, and the momentum levels are lower, and that's not positive, especially in light of momentum levels. Now, here's something else that's interesting. Bond market. S&P positive, China trade war being resolved, and what does the bond market do? It trades above the 50-day moving average. The bond market should be trading lower, not higher, with stocks making all-time highs. It's not. That's a warning sign, a big big warning sign. As a matter of fact, if bonds stay around here for another day or two, I'm going to go long the bond market because I believe stocks are going to come down to the 50 or the below the 50-day line to the twilight zone, and the bond market is going to rally, and volatility, which is right now at a 2-year low, is going to spike. Now, I know I can be a grim reaper sometimes. I know, but let's look now at the positive. The Russell 2000. Something magical happened for the first time in over a year. As a matter of fact, let's be specific here. Let's be over a year, yeah. The last time we broke out of this base right here, the 161 level, was beginning of October of last year. So the small caps are beginning to assimilate something working out with China. Now, does that mean the large caps are going to follow? Not so fast, not with momentum levels like this, not even close. I believe this is going to be a false breakout, not because it's a bad breakout. It's really a great breakout because you have such long congestion range, and those breakouts tend to be really good. I just don't think fundamentally the market is ready for it. Technically, it's anticipating it. My suggestion, what I would do is wait for a pullback back into the channel and wait for a small trend to begin continuously and wait for better news to come out of China and wait for the bond market to trade below the 50-day line, not above the 50-day line. Because look, let me show you utilities. This is the utility sector. I can't type this morning. This is the utility sector, and it's near, it looks like it's coming back up. So my suggestion is to stay defensive, stay in defensive sectors because the bond market is not being our friend right now. Momentum levels are not being our friend right now, all right? Not even close. Russell, the small caps are. And again, I said once we start breaking out here, I'm going to go long small caps because small caps are going to be, for small caps, look, they were the penny stocks and small caps, they were the first ones to dump, and they're going to be the first to rise. I just don't think we're quite there, but we're getting close. So keep your eye on the small caps and keep your eye out on Fed data that's coming out today. We have consumer confidence, we have Red Book, and most important, we have new home sales. That's going to be very, very important. Tomorrow is the big day. We may see some volatility. Again, keep your eye on the Russell 2000. This is really positive, but again, I'm very cautious. I'm cautiously optimistic, but again, I believe we're going to see a little trading range, a little choppiness, and then see a slight breakout. This led us down first. The small caps and penny stocks led us down first, and they're going to lead us up first. So the opportunities are definitely not in the S&P. They're in smaller stocks right now. Oh, and by the way, I just wanted to let you know, I don't know, I hope you guys watched my event. I had an event yesterday. If you did, then you know what I'm looking at right now. I'm looking at small caps, penny stocks, little stocks. This is an index that tracks little stocks. These are the ones that are going to explode. They're the first ones that are going to pop. They were the first ones to go down. They're going to be the first ones to pop up. Now, there's no doubt, absolutely no doubt, that the biggest gains in the shortest amount of time come from small caps. Yesterday, I showed you two stocks that in one day did like 70%, 80% in literally in one session. On average, small caps outperform large caps 8.5 times. So every time you buy a small cap, your profit potential is 8.5 times higher than when you buy a blue chip because it's a small cap, it's a penny stock. It makes sense. So now, this session that I had yesterday, all right, it showed you how you could trade penny stocks safely. And there's a way to do it. There's a way to do it with a system. And if you don't have a system, if you don't have a systematic way to trade them, it can be risky. But that's why most of us have avoided them. No more. Check out my live trading. It'll give you full step-by-step details on how to trade small penny-sized stocks with a small account. You can multiply your account, you can grow your account, and it's a great way to put a portion of your account to see oversized growth. I never put all my eggs in one basket, but I like to have some of my assets in speculative assets, maybe 10, 15, 20%, because the gains can be explosive. Don't get me wrong, the volatility will be there too. Whenever you have upside, you have downside. It's just the way it is. It's a double-edged sword. But if you can control your risk the upside can be explosive. So learn to multiply your account with penny stocks and small cap stocks. You don't need a large account. You don't need options. You could do this, especially now with some upside coming out of small caps. This is the first time since October of last year that we're seeing a breakout. I mean, you could see it here with your own eyes. It's happening. It's happening. So if China gets resolved, it's going to pull it's going to put a lot of money, a lot of cash flow into small caps. Don't miss out. Learn to multiply your account with small caps. It's a systematic approach to trading small caps. It's how a fund manager would trade small caps. It's how a large fund would trade small caps. Don't miss out. Follow the link below this video. Check out this training. There's no cost. There's no hidden fees. There's nothing. Just check it out. You will learn a lot. It's full of education. It's got a lot of value. Don't miss out. Follow the link below. Folks, the biggest impediment to success is procrastination. Don't do that. Follow the link, learn about small caps and penny stocks, do it now. And again, watch the Russell 2000. It's explosive. Also, if you guys love these videos, subscribe to our Market Geeks YouTube channel and visit us at our Wealth Press channel on Facebook. I post these early there. I'll talk to you guys soon. Bye.